Good afternoon, everyone. Today is Friday, the 14th of September, 2012, and this is Brian Shannon from AlphaTrends.net. Thanks for tuning in. Be sure to stick around to the end. I got some good trading ideas, I think, for next week as well. Let's take a look at where we ended up for the week. We had a great week as far as the equities go. S&P was up 2%, NASDAQ up 1%. Russell is outperforming as we thought it would as it broke that inverted head and shoulders pattern a couple weeks ago, up 2.5%. The financials really leading the way here, up 25.2% year to date with their additional 3.8% rally this week. And the bonds and the dollar got hit pretty hard, bonds in particular. So let's take a look at the action here. The S&P 500, as we know, broke this little downtrend line of this consolidation a week and a half ago. This week we rallied up. I'm sorry, that was late last week, and we continued to consolidate those gains here early in the week. We did so, with just a slight shakeout in the S&P 500 on Monday, but we held up above the rising 5-day moving average, and although we were cautious with a bias towards the long side because of the rising 10, 20, 50-day moving average as well as that 5-day moving average, and we were going to remain innocent until proven guilty as long as it remained basically above 143.5. Well, we can move those levels up now, obviously, because after the Federal Reserve on Thursday, we had an explosion higher in this market, and we can take a look at those 2 days, that Thursday and Friday. Here's where we saw that initial volatility, and then the buyers have obviously remained in control as it closed just above that 2-day volume weighted average price. So the S&P 500 is up at multiple year highs. It's at that level from the January of 2008 highs and into another potential level, but of resistance, that is. But there's no reason to think it can't continue up towards 155. Now that doesn't mean that we're looking for a move to 155. It means it's certainly a possibility, and if we manage risk along the way, we have the wind at our back and we have the momentum. So we need to remain cautiously optimistic, and I'm always cautious. I think you guys know that by now, that I always talk with a tone of caution because I've seen too many times where this type of consolidation will reverse and hurt pretty badly. But you have to be able to be flexible and willing to get back involved as it breaks up out beyond the resistance area. The NASDAQ we were a little bit more concerned about this week, as it did start out on Monday with some weakness, and then it spent Tuesday and Wednesday below the 5-day moving average, but it's still holding above what we were identifying as the key level for the week here at about $68.40. So yesterday, obviously, we had the big news, and that got this market back in gear to the upside. And the path of least resistance obviously still remains higher here. This is a great rally. It seems as though it's getting extended, but it's done this type of rally before. So don't look at it in terms of, hey, it should be at this resistance from, I don't even know why I drew that level on there, but this is the next real potential level of resistance, and it's at 73, and I don't think it's really likely to offer a lot of resistance. Go with the trend, manage risk, and be flexible in what you're what the market is telling you. And you have to listen to market structure and be willing to change your plan as the market dictates. The reason we were cautious, mainly on the NASDAQ, was we were optimistically cautious because the longer term trend was up, but the semiconductors were really lagging this week, and they had they kind of stuck below. Well, let's take a look at the 30-minute time frame, because we saw that rally, then it gapped down and stayed below that 5-day moving average. Well, yesterday they began to rally. They got above that 33.50 and even above the 33.40 level for a little while. So if you recall, this is the little band of resistance that we had been looking at before, this prior support, which became resistance in here, and now we're basically at that level. So the semiconductors did hold above that rising 50-day moving average and came down and basically touched it once again. But this semiconductor market definitely is much improved and really lets us breathe a lot easier. Now we want to see, I think, 33.15 act as support early next week. If we can do that, then even down to 33, we want to give the benefit of the doubt to the buyers with that rising 5-day moving average. You could argue these markets got a little bit ahead of themselves, but they're doing what they should do, which is continuing higher in their primary trend, which is an uptrend, of course. The daily Russell 2000, we've been talking about this one since the break of the resistance and that neckline at really 82 was the bigger level that that needed to be broken. And we've really rallied nicely here the last 2 weeks. We're up beyond the highs for the year, obviously, and on the weekly time frame, we're approaching the highs from 2011, which are also all-time highs. So the Russell 2000 is clearly the relative strength leader overall. And again, if you take a look at the year-to-date numbers, the Russell 2000 is up 17%, similar to the S&P 500, but it's still lagging the NASDAQ and the financials. So maybe we continue to get some outperformance there. If we remember on this weekly time frame, we also have this inverted head and shoulders pattern, which has bullish implications. But the idea is, as always, let's monitor the key levels, make sure we're holding up at support, and then when it breaks the top end of the range, you have to say, now it's making a higher high. Where would my stop go below the higher low? Because if it broke down below, if it broke out, failed, and then came back down, well, then we would have had the potential for a failed breakout and a fast move lower. Instead, we do have a nice continued uptrend in the Russell 2000. Next week we'll look for early on about 85.75 to become support, and continue to give the benefit of the doubt to the buyers. The corrections have been coming very bullishly through time rather than by price, and a time correction is more bullish, and we've been talking about this in the S&P 500 as well, that these have been time corrections and they're more bullish than a price pullback because it shows there's an underlying bid to this market. And with the Federal Reserve making further easy money policy, that should continue to be the case. Don't totally rely on that, though. I mean, you still have to manage risk, but know what the environment is, that it does continue to favor good upside. We've still got a lot of global economic and political issues, so those will still crop up from time to time and add to this wall of worry this market is climbing. But the trend is higher, and the trend is your friend. The financials, these guys have just been super strong here. Again, up 25% year to date. They broke that 1520 level a week ago Thursday right here, and then they broke out, and they've just continued to ramp higher with only the brief 2.5, 3-day pause in this rally. And the people who are looking for the top and looking for resistance and selling short into these levels are getting exactly what I think they deserve, which is losses, because you can't sell short into a strong rally like this and expect to be right and be smarter than everyone else. We've broken beyond an important level here at $16 a share. Next week we'll look for 16 to hold as support. And again, I think that you can look at it and say, well, it's up too much, and whatever other arguments you want to make. But the fact is, it keeps going higher. There are still buyers for these markets, and as long as there are buyers, selling short doesn't make sense, except for the very briefest day trades. I wouldn't be suggesting swing trading any shorts at all. So let's take a look at some of the leaders. Google, I still think, I said it maybe a month or so ago, I think it's headed towards 800 probably by the end of this year. I've been kind of cheaply waiting for a deeper pullback to buy some calls on it, and I really haven't participated in it, but I do think it goes to 800 by the end of this year. I think that Apple just continues to move higher. There's, it broke out of its consolidation in here as well. So we've got some strong leadership in those areas, and you may feel like you missed out on this rally this week, but there are still opportunities. I want to present about 10 of those to you for next week. Acme Packet has had the shit kicked out of it here the last year and a half, and it just broke some resistance recently. Let's just drill down a little bit. It broke some resistance right in here at about this $18 level. That resistance has held as support. Now we have a rising 10, 20, and 50-day moving average on a 30-minute time frame. You can see we've got a nice pattern here. We're back above the 5-day moving average, and I think if we take out today's high, which was 2014, if we take that out next week, we could set a stop just underneath this, which would account for our higher low, so at about $19.25, and I think you would have a good movement in there. By the way, Facebook was a great winner. I mentioned that on that Tuesday midday video about buying call options with the 1950 strike at 20 cents, and they're obviously worth $2.50 if you held them till now. I held them for about a 700% gain, but they are, it was a trade and it worked well. They expired today, but let's take a look at some more ideas. CYH is Community Health Services. is. And if you look at the weekly chart, we broke this level, pulled back, and held some support. Now on the daily time frame, we got back up to this level once again, backed off, and we created a nice higher low here at the rising 10-day moving average. Looking at a 30-minute time frame, here's that support. We kind of pushed beyond it today, and I think that right here at the end of the day, it really gave an opportunity to buy the stock. I didn't take it, but we were looking at this in the chat room to buy above this level 28.49 with our stop just below at about $28.15. And I think that's still a good play for Monday, that you could buy this thing with a stop at about 28.15, and it has some decent room to run, perhaps even up to 31.32. Now, the way I always do it with Alpha Trends is I'm not telling people exactly what to do. I want you to take a look at these ideas and say, these ones make sense. I like the $28 range, but I'm not interested in a $1.89 biotech stock. I wrote an article for Traders Planet about this and how risky it is, and it didn't trigger a buy for us this week. I was talking about above $2 a share, 201 actually, that it could get going. And it's these biotechs, the weekly chart looks good. Sometimes these things just get going crazy and they'll double in a day or 2 days. So I like to keep an eye on them, but they're risky and you don't want to trade them until they get some momentum. I would set an alert for 196 because that was the high this week. That is on Monday. I'd set an alert for 196 and then decide whether or not it looks like it's going to build the energy to make it above $2 and a penny. If so, maybe your stop goes at about $1.88, but you can't give these things the benefit of the doubt because when they fall apart, they fall apart. Look at Jaron this week. There were a number of other ones which I'd forgotten. Their symbols, I think ZLCS was another little biotech that fell apart here. Anyways, they're risky stocks. Iron Mountain, however, is a nice, a good name here with an average daily volume of about 1 million shares a day. It was at 10 million shares a day. So it's a very liquid stock, New York Stock Exchange. The weekly chart you can see is looking bullish here, as is the monthly time frame. It really hasn't done all, back in the 90s and early 2000s, this was a great uptrend. It's really done a whole bunch of nothing for about the last 5 years, but I think that could be beginning to change maybe. And today, right here at the end of the day, it did give a buy opportunity. So, just above this level. So I would say maybe it pulls back down towards 33 and a dime and then begins to rally. Worst case, stop down at about $32.70. And Iron Mountain looks like it should head up maybe towards 34, 35 bucks a share. And again, make these trades your own. Just because I'm suggesting these tight stops, maybe you trade a smaller position size and you decide that you want to keep your stop, give them a little bit more room. MIPS has a great looking weekly chart. It broke some resistance here, I believe on an earnings report about 2 weeks ago. And this thing looks like it should be headed for 8.5 pretty easily to me, and from $7 a share, that's a nice percentage move. It trades 760,000 shares a day on average. Here's where it broke some resistance on increasing volume. That resistance now holding a support. The volume is diminishing, and we've got a nice tight consolidation in here. And I think back above $7.37, that is just above this high here, and maybe that's 738. Back above 78 or 738 or so, you could buy this thing. Worst case stop right here. I would even suggest that or I would probably trade it with a stop near about 7 and a dime. And these are all meant as swing trade ideas. Whether you day trade them or swing trade them is up to you. They are, we were talking about in Alpha Trends today about SSYS, and SSYS looked like a good opportunity for a swing trade setup. I was talking about if it gets above 64. If you were watching it early this morning, there was a big offer there, about 35,000 shares. Let's just take a look at a 2-day chart at 64 bucks a share. Well, they finally blasted through it, and you had to be right there to get it, but it ran a quick $2 right there. However, the stock pulled all the way back. So if you don't take some of your profits in these quick gains, especially when it gets up towards daily R2, I think you're missing a lot of the opportunity to lock in some gains. But anyway, Stratasys is looking decent. I'd keep an eye on that. But let's go back to MIPS. MIPS, I think you get it back above this 739 level with stops in this area. It looks like it's headed for about 8.5. And again, if you get a quick pop, maybe you decide just to day trade it. I often do that. What I'm looking for is swing trade candidates, but then I often day trade them. ONXX Pharmaceuticals, ONXX. Some people will call this a double top. They've got no business doing that until it breaks down below 66.50. If you look at the definition of a double top, it looks like the letter M, and it's completed as it gets back below the midpoint. It's nowhere near that. Instead, it's actually holding up very well after pulling back and testing the 50-day moving average. It broke some resistance a week and a half ago. Today, we saw that it pulled back, or I'm sorry, we saw a little pullback since then. And today, what we saw was it's getting back up to this level, and I think back above 77 bucks a share, that this one should get going. We're looking at this one today because, here's the information from 5 days ago. That 5-day moving average on Monday is going to come crashing down still, and then it's going to begin to level out. So I think about midday on Monday, getting back above 77 bucks a share, I think you could buy this stock with a stop even probably just about 76.20. And as you buy it, you look at this thing breaking out to all-time highs. Who knows how high it could go? But I mean, we're looking for at least a test of the highs near about 78 and a half, 79 bucks a share. So I think that makes for a good risk reward. A smaller stock, TriQuint Semiconductor, TQNT. You can see it's above the 50, 100, 150, 200-day moving average. And on this daily time frame, we have average daily volume of 2.6 million shares. This 30-minute time frame, we can see we've seen a little bit of resistance up there. But really, the better level to keep an eye on is this $6.10 level. You don't have to wait for it to break out to a new high to buy it. In fact, a lot of times when it breaks this little level, we get much better trades than you would if you're waiting, and better risk reward by getting involved right here or adding half of your position here. This is what we talk about a lot in Alpha Trends, and then adding the rest of it above that 6 and a dime with a stop down here. So you have maybe a little bit of an average price system that the momentum should come in above 6 and a dime, and I could see shares of TriQuint rather up towards, it breaks this level. I think you get it up towards the high end of the range of $7 a share or so. A couple other ones, two more we'll talk about. VRTX, this one had gapped up significantly and then just had this disaster day, which it recovered from another disaster day. So here's a great example of, it's a liquid stock, it's a big pharmaceutical, but look at the gaps, big gap up, but then these two horrendous gaps lower. So this is the personality of the stock. You have to understand the personality of the stock and say, well, shit, I don't want to be involved for any gaps down like this. That's just devastating. You just get getting kicked between the legs first thing in the morning when you see your stock prices. But the stock has reversed back from this pattern of lower highs and lower lows to a pattern of higher highs and higher lows. We have a rising 10, 20, and 50-day moving average. It got going out of this consolidation here today, and you can see here again, this is the type of consolidation we're talking about. When it has a declining 5-day moving average, you don't want to buy it, but you want to buy it above here, for instance, today, and then with your stop initially here, I think that the stop right now should go just below this higher low. So we have a low, a higher low, and another higher low. Where do you personally feel the best place to put your stop is? Do you feel it's best to put it way down here? I think that's way too far away. Or are you using a random 7%? I prefer to say, what's the definition of trend? Higher highs and higher lows with a flat to rising 5-day moving average. We got our higher high with the rising 5-day moving average here. Here's our higher low. If it gets back below there and I'm still holding it, I'm thinking that I'm not paying attention to the direction, to the message of the market and the definition of trend. So one more stock to take a look at next week would be YELP. YELP has been it's a pretty volatile stock. It's one of these internet names. So it keeps coming up to this level, though, this 26.5 to 27 level, and it backs off pretty hard. It looked like yesterday it was doing that once again. Let's take a look at the 10-minute time frame. Yesterday it broke down through some support. It looks like it was just a shakeout, though, and from that failed move lower comes this fast move higher, right back to the top end of the range. And I think even you just take out today's high of $26.50, that this stock should develop some momentum. And you can put your stop, if you wanted to be tight with it, right below this afternoon's low, so at about $25.80 for a risk of about 70 cents a share. If you wanted to give it some room to wiggle, maybe down near 25. The whole idea is these are potential trade scenarios. No one's going to trade them all. It's not important how I trade them. The important idea is to make each trade your own. trade it on the amount of capital you have, what liquidity you're comfortable with in terms of average daily volume, what typical price range you're comfortable with. And anyways, thanks for still listening if you made it to the end, and have a good weekend. I'll talk to you next week. Thank you.